let's have this discussion about active versus passive income. So active income, most of us understand what that means, right? It's compensation for work that we actively perform. Um, it's less freedom. We just talked about that, due to location, because you have to go into an office or have to go into a specific job on a daily basis. Um, and is lower from an upfront perspective, from an effort and an investment perspective, right? So most people understand that. It's an example of an active income is your salary, the wages, as well as tips if you work for a restaurant or a bar, things like that where you get tipped. So a W-2 job, active income, you're actively working. A 1099 job can be seen as active because you're actively, working for, a business or a company, right? So passive income is a little bit different, right? So compensation for work that you already have performed. You have unlimited growth potential when it comes to, a passive income generator. You have more freedom, obviously, because you're not actively working for the income. The money is working for you, while you're sleeping, right? That's the goal. Higher upfront effort from an investment standpoint, and an example of that is for dividends as well as stocks and real estate, which is something that most people try to utilize from an passive income perspective, is trying to buy rental property, as I have done, as we continue to do, and be able to build that passive income threshold for our family, moving forward. And then we big into stocks when it comes to dividends, as well as growth potential, long term stocks. So that's just a quick understanding of the passive and active income. As we move forward into the cash flow quadrant, we'll get really more in detail about this. But I just want to emphasize the importance of you having a level of passive income and how you can grow that, and really take the time to figure out, do I want to be a real estate investor? Right? Can I be a real estate investor? Do I have do I meet the requirements to even buy a house? Not everybody meets that requirement, right? Do I have the income, the credit, the debt to income ratio? Is my debt in a place where I can actually buy a house? If you're not in that place, well, do the things and take the time for you to meet that requirement, right? Or if you don't want to invest in real estate, that's absolutely fine. Can you invest in the stock market? Right? On average, the stock market has gone up to about 8 to 10% over the last 70 years. On average. Google it. It's just the facts. On average, the stock market has gone up 8 to 10% annually over the last 70 years. So just from a math standpoint, just from a factual standpoint, you're making 8 to 10% on your money on average, because sometimes it can go up higher, sometimes it's going to go lower, and then sometimes you're going to lose money, right? But if you stay long term in the market, you are mathematically, factually, if you do it the correct way, it's almost impossible to lose money. People lose money in the market because they gamble and they don't actually understand what they're doing, right? So growing that level of passive income, growing them stocks, the dividends, the investments, investing into real estate, getting a real estate property, getting some type of passive income in a cash flow when it comes to owning homes. Um, they call, what's that called? You can rent out you can rent out a home in your own house, right? House hacking, that's what they call it, house hacking. You can house hack if you're younger, if you don't have a family and you feel comfortable being able to rent out a room in your house, or buy a duplex and rent out one of the units, right? Buy a triplex, rent out the other two units. It's income, right? So these are just some practical tips, some ways that you can utilize, passive income to help you grow your cash flow on a yearly basis, to then progress you to some type of financial security. And ultimately, what the goal is here is financial freedom.